Good morning, everyone. Welcome to the live virtual revisionary classes of ICAI. Today, our topic of discussion would be cost accounting systems, job costing, batch costing, and unit costing. Let's start with cost accounting systems. So, cost accounting systems, the costing systems sometimes is very important to be installed in any organization. The organization is so important, big, that it is important that we have a separate cost accounting systems to be able to control the various costs. So we have either integrated cost accounting systems, non-integrated cost accounting systems, non-integrated or non-integral. So if it is a non-integrated or non-integral cost accounting system, it means the cost people will have their separate set of books. So in this case, we will have a different account, a costing P&L account, which means there will be a financial profit and loss account and a costing profit and loss account. Now, when you have non-integrated cost accounting systems and costing P&L is separate from normal financial profit and loss, which we statutorily are required to make, there is also a need to reconcile the profits, as both the profits, costing P&L and financial profits can be different. So we need to reconcile the profits. If there is integrated system, then we don't need to reconcile because there is only one set of books. The financials are making their book and cost accounting system picks up all the information relevant to maintain the cost accounts. However, in non-integrated, the books of accounts are also separate and we will have two profit and loss accounts, one financial profit and loss account and the other would be the costing profit and loss account. So when the two profits are showing different profits, you need to reconcile those profits. Now, first we'll start with the non-integrated accounting systems and we'll see what is the scheme and how they are prepared. So firstly, what are the different sets of books? So here we come across one account which is called cost ledger control account. So we create a notional account, the cost ledger control account. This may also be called as the general ledger adjustment account. All the expenses that you incur, you will credit the cost ledger control account. So in integrated, if you are incurring an expenditure through bank or cash, you credit the bank or cash. If you have not paid, you call it a outstanding expense. If it is creditors, you call it creditors. But here, it doesn't matter whether you've made the payment or not. Any expenditure which you incur from out of pocket, that will go to cost ledger control account. You prepare a material control account, stores ledger control account, wages control account, work in progress ledger control account. You will have production overheads control account and a finished goods control account or finished goods ledger control account. But the main books you will maintain is these four only. Though many accounts are coming up, but the books that will be there will be cost ledger control account, stores ledger control account, work in progress control account, and finished goods control account. These are the four ledgers you will maintain. And these are the other accounts which will come in the picture when you are making the accounts. However, the books will only be these four accounts which will be carried on from year to year. After finished goods, you will also have administration, overheads, control account. Then from after administration overheads, you will have the selling and distribution overheads control account, the cost of goods sold account, cost of sales account, costing profit and loss account, and lastly, the sales account. So these are some of the major accounts which will come into the picture when you are preparing the non-integrated account. So how does the flow of these accounts happen? So for the first time, for example, you order the raw material. You get the raw material from the suppliers. So when you have the material, you credit the cost ledger control account. Once they receive the raw material, you put it in the stores. So stores ledger accounts gets debited and material control account gets credited. So you put it in the stores. From stores, you issue it for production. Issue the material to production department for making it into a finished goods. So this becomes WIP, work in progress account, and we call it work in progress, past the journal entry, work in progress account debit, and stores ledger control account credit. Now, it is possible that you issue the raw material from the stores for directly production, or you may also issue sometimes some materials, let's say for repairs or to be used indirectly. So if it is for repairs of factory in factory, you will call it factory overheads or production overheads. If it is issued to the office or administration department, so you will call it administration overheads. Your journal entry will be WIP debit to stores for direct material. For any indirect material, it will be production overheads to stores or administration overheads to stores. Or if it is issued to selling and distribution department, maybe some cartons or something, then you will call it selling and distribution overheads debit to stores ledger control account. From work in progress, you have already issued the material, then you incur certain wages. So you pass an entry of wages control account debit to cost ledger control account. And these wages which are direct, they go to WIP, which means your next journal entry would be work in progress account debit to wages control account. However, once again, if the wages are indirect, then you may pass on an entry production overheads to wages control account or administration overheads to wages control account or selling and distribution overheads debit to wages control account. Now you have incurred the material and wages on your work in progress, but work in progress comprise of one more expense, which is your production overheads. So you pass on another entry for whatever the production overheads you have incurred, which will be production overhead debit to cost ledger control account. Once you have passed this entry, now you have production overheads at three places: for the indirect material issued, for the indirect wages incurred, for the indirect wages incurred, and the actual production overheads which you have incurred as an expense. So if you will add the three, this is your actual production overheads which you have incurred. So let's say this comes out to be, for example, 90,000 rupees. Now you will charge the production overheads to work in progress, but you will not charge entire 90,000. You will absorb the work in production overheads to work in progress. Remember, we did the question a chapter on overheads where we looked at that overheads can be absorbed at a predetermined rate. So, for example, on the basis of the predetermined rate, the production overheads are absorbed in the WIP, let's say 95,000. So, if 95,000 are charged, we call it a over absorption. And if production overheads are charged just at 80,000, we call it a under absorption. That means actual expenditure is more, but the absorption rate did not allow us to charge the entire cost to the WIP. In this case, there will be either under or over absorption. They may also be getting to exact 90,000. In that case, there will be no under and over absorption. But production overheads are recovered from the WIP at an absorption rate. So if there is over absorption, that means you have charged the expenses unnecessarily higher. This you can write off from the costing P&L account. So because you have charged expenses higher, here your entry is production overhead to cost, and the next entry is WIP to production overhead. So production overhead will be unnecessarily credited by 5,000 extra. Your entry for absorbing the over absorption or writing of the over absorption to costing P&L would be production overhead debit to costing P&L account. So this will increase the profit in costing P&L account by 5,000, and the expense which was overcharged in WIP will be adjusted. Similarly, if there is under absorption, you will see that production over is debit by more, but credited by less. So you will pass that entry costing profit and loss account debit to production overheads by 10,000. So if you write off right immediately, whatever the under absorption and over absorption is, you can take it to the costing P&L account. You may not carry it forward. However, if you want to carry it forward, you can leave it like that, or you can transfer it to production overhead suspense account, which means that in some years there was under absorption, some years there is over absorption, which will automatically now get adjusted in the long run. Right? Now, whatever the expenses you have incurred, wages, material, wages, production overheads absorbed. So out of this WIP, some of the goods may be completely produced now. That moves to the finished goods account. So those goods which are now 100% complete will move to the finished goods account, and your journal entry would be finished goods account debit to work in progress. When they move to finished goods, here you will charge the office and administration overheads to the finished goods account. So this will also be absorbed at a predetermined rate, and same thing can happen. Administration overheads to cost ledger control account, the actual expenditure, but finished goods to administration overheads, the absorbed administration expenses. Once again, they can be under or over absorption. So whatever the finished goods are 100% ready, some of them may be sold. So they will go to cost of goods sold account. So your next entry will be cost of goods sold account debit to finished goods. And here you will incur the selling and distribution overheads will be absorbed. So selling expenses will be first incurred, selling and distribution expenses to cost ledger control account. Then they will be absorbed to the cost of goods sold. So when selling and distribution expenses are incurred on cost of goods sold, it becomes cost of sales. This cost of sales will move to costing P&L account, and the sales will be also recorded. So here for the first time, cost ledger control account will be debited and sales will be credited. And this sales will then move to costing P&L account. So your next entry will be sales debit to costing P&L account. That would be the entire scheme of the process flow when you have the non-integrated accounts. And these are the accounts you create, and these will be the journal entries you will pass. It is also possible that this raw material which you have purchased, you may return it. So if you return it to the vendor, you will reverse the entry. The entry you passed on stores ledger debit. If you return to the vendor, you will pass the entry of the stores ledger. So cost ledger control account will be debited and stores may be credited there, right? So if you are returning it from stores to the vendor, the journal entry will be cost ledger control account debit and stores ledger control account credit. So it's technically when you have the entry for the sales, that's the first time when cost ledger control account is debited. But if you're returning the material to the vendor, then also your expenses is reduced. So cost ledger control account would be debited. Similarly, it is possible that the stores have issued the material to the WIP, which is now returned back to the stores. In that case, when you issued, you passed on the entry WIP to stores, and now you will return. So you will pass on the entry stores to WIP. So if there is a return of material, these are the entries you may pass. And if the materials are transferred from some specific job, like job 1 to job 2, then you will pass on an entry job 2 debit to job 1. So the expense should be charged to job 2 now, not to job 1, right? So let's quickly look at the journal entries also. So first entry would be material control account debit to cost ledger control account. For purchase of material. So it doesn't matter whether you're purchasing on cash or on credit. Here you will, costing is not concerned with whether the payment is made or not. That's the job of finance. Costing is only concerned that an expense has been incurred. Put this raw material into stores. From stores, issue it to production. I'm not writing again and again, work in progress control account and all. So issued material for production. Return the material to vendor. To stores ledger control account. Stores ledger control account debit to WIP, control account for return of materials from production to stores. Then you incur the wages. So wages control account to cost ledger control account for the total wages which you have incurred. Out of this, whichever is direct wages will go to WIP. For direct wages, charged to work in progress. And for indirect wages of production, will charge to production overheads account. So if it is related to indirect wages related to production, it will go to production. If it is indirect wages related to office administration, it will go to administration overheads. If it is indirect wages for salesmen or something, then it will go to selling and distribution overheads. So this is how you allocate the wages. Once you have allocated the wages, you will incur the production overheads. So production overheads control account debit to cost ledger control account. For incurring production overheads. Now recover the production overheads from WIP. For recovering production overheads from the or absorbing the, you can say recovered, absorbed or charged to the work in progress. So now the entire WIP is also complete. From here, the goods will move to finished goods department. So finished goods account debit, control account debit to work in progress. So whatever the goods which are 100% complete will move to the work in progress department. Completed book goods moving to the finished goods department. To finished goods account. Now you will incur administration overheads. So administration overheads incurred is administration overheads debit to cost ledger control account. These administration overheads will be recovered from the finished goods account. So now this is the total cost of production of goods. Out of these finished goods, some of the goods will now move for sales. So next entry would be cost of goods sold account. To finished goods control account. For selling of completed units. Transferring to cost of goods sold account. After you have transferred all the goods which are sold to cost of goods sold account, you incur selling and distribution overheads on them. So selling overheads control account debit. To cost ledger control account. This is your selling expenses incurred. Okay. Now these selling expenses will be recovered from the cost of goods sold account. For selling overheads recovered. So when these are charged to cost of goods sold account, the entire cost moves to cost of sales account. So your cost of goods account will be completely uh, balanced off now. Cost of sales account debit to cost of goods sold account. For transferring COGS to cost of sales. In all this process, if ever there is a over absorption, then you will have the specific, let's say selling overheads was over absorbed. So selling overheads account debit to costing P&L account. For over absorption, transferred to costing P&L account. If it was under absorbed, costing profit and loss account debit to selling overheads. Finally, this cost of sales moves to costing P&L account. So costing P&L account will be debited with the entire cost. Sales will be recorded. When sales is recorded, cost ledger control account will be debited. And this sales will move to costing P&L account. So costing P&L is debited with all the expenses and credited with sales. So when you will prepare the costing P&L account, you will get the net profit here, which will again move to cost ledger control account. Okay, so this is how the scheme of entries will move. Let us now take up the question and quickly try to understand how the accounts are made. So you will not be asked to pass all the general entries from the very beginning. You will have some opening balances. So let's say you have an opening balance of stores ledger, work in progress control account, finished goods control account, and general ledger or cost ledger adjustment account. Ensure that the total of these three matches this. Now, like I said in the previous uh, slide here, that there could be over absorption or under absorption of overheads, and that you can write off to costing P&L account. However, it is also possible that it's not the policy to write off the costing P&L account. Maybe you carry out the selling overheads expense account or so selling overheads control account debit, and you create a suspense account for this, or selling overhead account debit to selling overheads suspense account. So you will carry the over absorption to a suspense account. Similarly, in the production overhead, if there is over absorption, you will carry it to the suspense account. So suspense account is debited here. In that case, if there is an over absorption, you will find that selling expenses at suspense account debited by certain amount, or production overhead debited. If there is under absorption, it might be credited. So you will see another accounts also appearing, but generally it's either stores, WIP, finished goods, and cost ledger control account. These are the four books that we maintain in non-integrated. So you start with the opening balance of these four, and you will prepare a stores ledger control account, a work in progress control account, a finished goods control account, and cost ledger, or because the name here is general ledger, you will call it general ledger adjustment account. Write down the opening balances of all three: 53,375, 104,595, 30780, and 188,750. So once you have pasted the opening balances of all the four accounts, now you see what is happening in the transactions for the next quarter. So material is purchased 26,700. What will be the journal entry? Material control account debit to cost to general ledger adjustment account. I will now onwards write it as GLA. Okay. How much? 26,700. This will move to stores. So stores ledger control account debit to material control account. 26,700. Instead of passing these two entries, you may directly pass an entry, stores ledger control account debit to general ledger adjustment account. $26,700. So when you will paste this entry in your accounts, both the accounts are impacted. Stores ledger is debited by general ledger 26,700. So already there was raw material kept in the stores for 53,375. And now you have brought another raw material 26,700. We have debited, simultaneously we will credit it by stores 26,700. Then what happened? Out of this, material issued to production. What is the scheme of journal entry when you issue the material for production? Work in progress control account debit to stores ledger. So once again, there is an impact on both the ledgers by 40,000. Work in progress is debited, stores is credited. So out of this amount, 40,000 worth of raw material has moved from here and it has gone to the WIP account. So we have used 40,000 worth of material for production. Material issued for factory repairs. So we have talked earlier, material may also be issued for other things or indirect material may be there. So if it is issued for factory repairs, it is equivalent to indirect material. And as the word is factory, so its production overheads, debit 900, and stores ledger would be credited by 900. So stores ledger is to be credited by production overheads 900. And we will prepare one more account, production overheads account. It is to be debited by an expense which is coming from indirect materials to stores ledger control account 900. Factory wages paid 77,500, which includes indirect wages of 23,000. So first you will find out if 23,000 is indirect out of 77,500. So 77,500 minus 23,000. How much is the indirect wages? 54. Direct 23,000 is indirect. That means 54,500 is direct. So your entry would be first wages control account debit to general ledger adjustment account for the expenses incurred for 77,500. Out of this, 54,500 will move to WIP and 23,000 will move to production overheads. So in the general ledger, what will be the entry? First, you have incurred wages, 77,500. Out of this, 23,000 is indirect and 54,500 is direct. For 54,500, your entry would be WIP to wages control account. So we will prepare one more account, which is wages control account. Here, wages control account debit to general ledger adjustment account, 77,500. Out of this, direct wages will go to WIP, 54,500. And indirect wages will go to production overheads, which is 23,000. So one debit and credit we have done for the wages incurred in general ledger adjustment account and wages control account. Now wages control account is credited with 54,500. So we will debit the WIP with wages 54,500. And we will debit the production overheads by wages 23,000. To wages control account 23,000. Whenever you are doing questions in exam, always ensure you're always matching your debits credits simultaneously. If you do that, you will never ever have a problem that there is a mismatch in accounts or balance sheets not telling anything like that. Next is your production overheads incurred. What will be the journal entry? Production overheads incurred. The journal entry will be production overheads debit to general ledger adjustment account. How much? 95,200. So production overhead will be debited to general ledger adjustment account, 95,200. And general ledger adjustment account will be credited by production overheads, 95,200. So you see, whenever an actual expenditure is happening, we are taking it all to the general ledger adjustment account. Then production, after this, we saw that production overheads are under absorbed and written off. Under absorbed and written off, which means actual expenditure was more. So how much is the production overheads total so far? It is 900 plus 23,000 plus 95,200. So it's 1,19,100. But how much is charged to WIP? WIP to production overheads for production overheads recovered. So we didn't have the information of absorption rate. We didn't have the information that how much is charged to WIP, but we have an information that production overheads are under absorbed by 3,200. So production overheads need to be credited further by 3,200 and it is to be written off. So this will move to costing P&L account. That means here the credit figure is 3,200 less than 1,19,100. So how much is charged to WIP? 1,15,900. So actual production overheads incurred are 1,19,100. But how much is charged to WIP? 1,15,900. What will you do with the rest? You will write it off simultaneously to costing P&L account. So pass these two journal entries by WIP 1,15,900 by production overheads under recovered written off to costing P&L account 3,200. And you will see that your production overhead account is 100% matching and closed. There is no balancing figure to be carried for the next quarter or next period. So WIP is, we have credited the production overhead with these two figures. Now we need to debit it. So we'll open up a costing P&L account also. And here we'll post one entry to production overheads under absorbed 3,200. So one debit is done. And what is the other amount which is to be debited? 115,900, which will go to WIP. 115,900. Right? So production overheads are now incurred and recovered from WIP and under absorption is written off to costing P&L account. After this, sales information is given to us, 2,56,000. Journal entry for sales. General ledger adjustment account will be debited to sales. So in general ledger adjustment account, first time a debit entry is coming for sales, 2,56,000. So we have debited general ledger adjustment account. For credit, we open up a sales account by general ledger adjustment account, 2,56,000. How we will complete the sales account? By transferring this to costing P&L account, 2,56,000. So your sales account is also complete. Your production account is also complete. Your wages account is also complete. Nothing is to be carried forward for the next period. There is no closing balance. So we have pasted the entry for general ledger adjustment, debit and credit both. Sales is moving to costing P&L, debit here. So we will credit in the costing P&L account by sales, 2,56,000. Okay. So production overheads complete, wages control complete, sales complete. Here, all the accounts are still remaining. They are not complete. We have to complete these. The company's gross profit is 25% on factory cost. And at the end of the quarter, WIP stocks increased by 7,500. So we have some information by balance carried down. The WIP stocks increased by 7,500. So opening balance was 104,595. On this, you will add 7,500. So your closing balance of WIP is 112095. If this is the closing balance, what happens to the rest? The rest goes to finished goods. This means your incomplete work is worth 1,12,095. Then, which means that rest, whatever is the balancing figure, that's finished goods 100% complete. So you'll find out the balancing figure here. The cost of finished goods, which is complete, is 2,02,900. The work in progress account is also complete now, 3,14,995. Right? So this finished goods will move to finished goods account. So this means how much do we have as finished goods? 30,780 and 2,02,900. The total is 2,33,680. So we have finished goods worth of 2,33,680. Then some part of it has gone to costing P&L or cost of sales, cost of goods sold, and some part of it has moved to removed as remaining as balance carried down. But we don't know this information, how much of 233,680 has been sold and how much is remaining. This we will get from this figure that the company's gross profit is 20% on 25% on factory cost. So sales is given and profit percentage is given. Sales is 2,56,000 and profit is 25% on factory cost. See, in this question, we don't have any administration or selling expenses. So entire thing is factory cost. So 1/4 on cost is 1/5 on sales. 25% means 1/4 on cost. You have the sales figure, but profit is given as a percentage of the factory cost. So 1/4 on cost is 1/5 on sales. Therefore, profit contained in 2,56,000 is equal to 2,56,000 into 1/5 is 51,200. Therefore, cost of goods sold is 2,56,000 minus 51,200. It is 2,04,800. 2,04,800. Okay, just a minute. 2,04,800 and 2,33,680. So your closing balance is 28,880. Okay. So it is 2,33,600. Okay. So your finished goods account is also complete. Your WIP account is also complete. No entry has been passed in general ledger because there is internal movement of goods from work in progress to finished goods and so on, right? However, we will prepare a cost of goods sold account as well. So how much units have moved in the cost of goods sold account from finished goods? 2,04,800. Where will they go? By costing P&L. So in costing P&L also you will pass an entry of 2,04,800. You can call it cost of sales or cost of goods sold. So this account is also complete, right? And work in progress is complete, finished goods is complete. Let's balance the stores. You had stores material worth of 53,375 plus 26,700 is currently purchased. So you had a total material of 80,075, out of which 40,000 was issued for production and 900 was charged to production overheads. So minus 40,900. The balancing figure of raw material in hand is 39,175. Your raw materials account is also complete. So what remains to be balanced? General ledger adjustment account and costing P&L account. So what is the difference here? This profit will move to general ledger adjustment account, to net profit transferred to general ledger adjustment account. Let's see how much is the net profit. 2,56,000. Basically, it should be 51,200, but because there was an under absorption, 3,200 will be deducted from this. So 2,56,000 minus 2,04,800, that is 51,200, but minus 3,200 under absorption of administration overheads. So net profit is 48,000, which moves to general ledger adjustment account. This completes your costing P&L account also. This is complete. Now this 48,000 will move to GLA. So now let's try to balance out the general ledger adjustment account. You had 1,88,750 incurred earlier already from the previous year, plus 26,700 worth of raw material, plus 77,500 worth of wages, plus 95,000 worth 200 worth of production overheads. So your total expenditure was 388,150, from where you sold 2,56,000 with a profit of 248, with a profit of 48. So the total expenses you have incurred, from there you have sold goods worth rupees 256 minus 48, it is 2,08,000. So your balancing figure of general ledger is to balance carried down for the next period is 180,150. The purpose of bringing the costing P&L here is because this is debited with the sales. However, we have to debit all the cost which has been sold. So if 256 is written here and 48,000 written here, that means 2,08,000 rupees worth of cost has been sold. This you can also see from here. Cost of goods sold was 4,800 plus 3,200 of unabsorbed. So it comes out to be 2,08,000 worth of goods are sold. Total cost incurred is 2,08,000. So if out of 430, this amount, 28 is sold, 1,80,150 of the cost incurred is carried down to the next period. Okay. You can always verify your answers. How? What will be the closing balances of all the accounts now? Stores ledger control account. It's 39175. 39175. Next quarter. Sales, we need to write two entry for every sum. Uh, Sales, first it will be general ledger adjustment account debit to sales, and second will be sales debit to costing P&L. So it will move to at two places. So total four entries will be there in the accounts. Gayatri, is it clear? Okay. So we had stores closing balance as 39175, WIP closing balance as 1,12,095, general ledger adjustment account closing balance, finished goods closing balance is 28,880, and general ledger closing balance is 180,150. Okay. Just check your whether it's ledgers are matching or not. So this total is also 180,150. That means whatever you've done is perfectly okay. Here I'll bring one point that had there been no policy to write down this 3,200, okay? So what would have happened is production overhead incurred is 1,19,100 and production overhead recovered is 115,900. So we will prepare a production overhead suspense account with 3,200. Okay, instead of taking it to costing P&L. So production overhead suspense account will also be there, or production overhead control account balance would also be there with how much? 3,200. So this will increase this by 3,200. Okay. And similarly, where would have been the change come? The change would have come in costing P&L. I'll change the ink. This figure would not have been here. So your profit would have been 51,200. Okay. So if this goes here as 51,200, your closing balance would have also increased by 32, right? So this would have also become 183,350. Okay. So you can, if you don't see a suspense account or anything in the opening balance, you may also make an assumption that it is the policy of the company to write off the complete counts to the costing P&L, any under or over absorption. Another thing, supposing the closing balance of stores was also given as 38,000. Our balancing figure is 39,175. But if this information is given to you as 38,000, then there is missing information or hidden information that 1,175, what happened to that material? You may assume it to be abnormal loss and you can charge it to by costing P&L. Okay. So I hope this is clear. This is how you will manage the integrated, non-integrated accounts. Let's take one small question again on this. A fire destroyed some accounting records of a company, and you've been able to collect the following information from the records as a result of consultation with the accounting staff. So incomplete ledger entries are there for raw material, work in progress, creditors, manufacturing overheads. So let's prepare all the accounts. Raw material account. You have brought down 32,000. Then you have the WIP account. Brought down is 9,200 and finished goods is 1,51,000. You have creditors account. Opening balance is 16,400 and carried down is 19,200. You have the manufacturing overheads account, amount spent. So to general ledger or cost ledger control account, 29,600. I'll prepare the cost ledger control account also here, or the general ledger control account. By manufacturing overheads, 29,600. Finished goods account is also given. Opening and closing, 24,000 and 30,000. But one information about finished goods we had here, that from work in progress, finished goods transferred was 151,000. So this entry we will also post, 1,51,000. Okay. So you have opening stock of 24,000 in finished goods and 1,51,000 is coming from work in progress. Carry down is 30,000. So to some extent, this tells us how much is the cost of goods sold. Okay, but let's first look at the additional information. The cash book showed 89,200 having been paid to the creditors for raw material. 89,200 paid. So to bank or okay, creditors is there, so it's not general ledger adjustment. 89,200 is paid. Okay. So if the balance is 16,400 in the beginning and 19,200 is the closing balance, despite having made a payment of 89,200, we get first balancing figure here, which is how much is the raw material purchased. So by purchases, 89,200 plus 19,200, it should be 108,400 minus 16,400. So 92,000 worth of raw material is purchased. To creditors, 92,000. Okay. Then ending inventory of WIP includes material 5,000, on which 300 direct labor hours have been booked against wages and overheads. So information regarding closing WIP is given. So you'll calculate the closing value of WIP, which has materials worth rupees 5,000 and labor 300 into labor hour rate. The job card showed that 7,000 total hours are worked. Wage rate is 10 and overhead recovery rate is 4 per direct labor hour. So 300 into 10, 3,000. And production overheads, 300 into 4, 1200. So the value of closing WIP is 9200. This gives us two information and total 7000 hours are used. So WIP will be debited with material, labor, overheads. So it will be debited by 7000 into 10, 70,000. It will be debited with 7,000 into 4, 28,000. And it will be credited with the balancing figure of, credited with the balance stock of WIP, which is 9200. So this will give us the balancing figure of how much is the material issued to WIP. 1,51,000 plus 9,200 is 1,60,200, out of which 9,200 was opening balance and 70,000 was wages and 28,000 was overheads. So material worth of 53,000, missing figure. You will make a working note for this. By WIP, 53,000. So you had raw material worth 32,000. You purchased 92,000. Total was 1,24,000. Out of 1,24,000, you issued 53,000 to WIP. So what is remaining with you in hands is 71,000. So this completes your raw material account. This completes your WIP account. This completes your creditors account. And this goes to how much is charged? 28,000. So there is 1,600 under absorbed. You may charge it to P&L account. Manufacturing overheads is complete. Similarly, your finished goods account will give you the balancing figure as cost of goods sold. So with whatever the information we had, we have completed the above accounts in the past ledger, right? Let us now look at integral system of accounting. Previous question was also integral system. How did we know that? Because the words that were there in the accounts were creditors. So had it been a non-integrated, we never use the word creditors. We use the word general ledger adjustment account or cost ledger adjustment account, right? Control account. Data Enterprises operates an integral system of accounting. You require to pass the journal entries for the transactions. Raw material purchased 50% on credit. So you will have stores ledger control account debit. Put it directly in the stores. 6 lakhs. And so we need to pass only the journal entries. I'm not preparing the accounts here. To bank and to creditors. Half half. 3 lakhs and 3 lakhs. This is your first entry for purchase of raw material, 50% on credit and 50% on cash. Material issued to production, WIP to stores. 4 lakhs. Wages paid, 50% direct. Wages control account debit, 2 lakhs. 50% is direct. Paid. So that means to bank. Now 50% direct, therefore WIP to wages control account 1 lakh. Production overheads debit 1 lakh and to wages control account. Factory overheads incurred, wages charged to production. So even if it is not mentioned, uh, we have taken it. Why? Because half is direct and half is charged to production. That means no other overheads, but only production. Factory overheads incurred. So again, I'll call it production overheads to bank, 80,000. Factory overheads charged to production, 1 lakh. WIP to production overheads, 1 lakh. Selling distribution incurred. What will be the general entry? Selling expenses to bank. Finished goods at cost, 5 lakh. So from the finished goods account, uh, work in progress, 5 lakh worth of finished goods will move to the finished goods account. Sales, 7 lakh 50,000. So 50% is credit. Debtors, 3 lakh 75,000. Bank, 375. To sales, 7 lakh 50,000. Closing stocks are nil. Receipts from debtors, payment to creditors. Debtors were 3 lakh 75,000, out of which 2 lakh is received. Bank account debit to debtors. 175 will be the closing balance of debtors. Payment to creditors. Creditors were 3 lakh. 2 lakh is paid. So creditors to bank, 2 lakh, and 1 lakh will be the balancing figure of creditors. Okay. So this is how you will prepare the pass the journal entries. Another small question. Pass the journal entries in the books of accounts maintained on non-integrated system for the following. First is issue of materials. So there is a direct material, 5 lakh 50,000, indirect material 150. Do you understand what is this entry? It is work in progress account debit to stores ledger, 5 lakh 50,000. And indirect material, assuming it to be production overheads. So production overheads control account debit, 1 lakh 50,000 to stores ledger control account. Allocation of wages, work in progress to wages control account, by 2 lakhs. And production overheads, to work in progress to wages control account, 40,000. Finally, factory overheads or production overheads are under or over absorbed. So factory overheads are over absorbed. So when you absorb factory overheads, the general entry is work in progress debit to factory overheads or production overheads. So they are over absorbed by how much? 20,000. How much is the production overheads we have charged? In material, 1 lakh 50,000 and in wages, 40,000. So 150 plus 40, 190. But how much is recovered? Over recovered. So maybe 2 lakh 10,000. Okay. Assuming there are no other direct further production overheads. So this means this entry is not required. This is just for an explanation. Okay. 150 plus 40. How much was production overhead? So production overheads are debited by 190, but they are credited by 210. So they are credited extra. Now you will debit them. So production overhead debit to costing P&L account. Okay, 20,000. Even if you don't look at this debit and credit, you can assume that when a overhead is over recovered, the expenses have been unnecessarily charged. So if the expenses are unnecessarily charged, the profits have come down. So you should increase the profits. And when you credit P&L account, you increase profits. Administration overheads are under recovered. So this means costing P&L account debit to administration overheads, which means expenses were more, but they have been recovered less. So more expenses are now required to be booked, which will reduce the profit. Okay. So as a part of your solution, this will not be there. This is just for an explanation. Your journal entries will be this 2, 4, and these 2 for over absorption and for under absorption. Or you can simply remember whenever there is over absorption, you have to credit the P&L. Wherever there is under absorption, you have to debit the P&L. Okay. We come on to the last topic for cost accounting systems, which is reconciliation. So before I take up this question on reconciliation, let's understand the concept of reconciliation. An organization is doing the same business, but just what is happening is they are keeping different records on non-integrated system. They are keeping financial records also, or financial books, as well as costing books. So when you are keeping both financial and costing books, what is happening is they both are showing some profits. P&L account and costing P&L account. So if the business is same and different sets of books are maintained, but both are giving us profit, they should give us same profit. Yet we see that the information you have from profit and loss account or the profit shown in profit and loss account is different from the profits which are reflected in costing P&L account. So these two profits are different. So we need to analyze why they are different and reconcile the costing profits with the financial profit. Now, why will they be different on the first account? They will be different because there are certain items of expenses which are purely of financial nature. So cost accounting books do not take them into consideration. For example, in expenses, cost accounts do not create provision for bad debts. Or for a matter of fact, they may not even consider bad debts. So there is always this thing that whether bad debts are recorded in cost accounting or not, maybe and may not be. Some people consider that yes, bad debts occur because you're wanting to sell more, and so there should be bad debt should be part of selling expenses. Whereas some cost accountants maintain that bad debts occur because collections have not been made. So whether money is collected or not, it is not related to anything to cost. However, interest expenses. These are purely financial nature. Goodwill written off. There is no concept as goodwill written off in cost books. Amortization of some other preliminary expenses also. All these do not have any place in financial books. Similarly, there could be items of income also. They could be rents received apart from normal business. There could be interest received, dividends received. So any income which is not from your normal business, in rent, interest, dividends, or profit on sale of an asset, all these come in financial books only, not in cost accounting. Similarly, loss on sale of asset could be a item of expense. Similarly, there could be certain items which are purely cost related to cost accounting. Cost accountants will allow you a notional rent even if you are using your own building for business. Costing may allow a notional interest even if you are doing the business using your own money. So there can be some notional salary for the efforts you have put in the business. So finance does not allow rent on own building or interest on own capital or salary for your own services. Cost books may allow this. So there are certain items which are purely of costing nature also. Similarly, there is difference in value of valuations. So the difference in profits can arise because of this. Stock valuations. In financial books, stocks are valued on net realizable value, cost or net realizable value, whichever is less. Conservative method. However, in costing, the stocks are valued maybe either FIFO, first in, first out, LIFO, last in, first out, which is generally not followed. FIFO or weighted average are the main prominent methods. But there are very many methods in which the stocks are valued under cost accountings. So this can give a difference in valuations of stock. They can be overvaluation or they can be undervaluation. And overvaluation and undervaluation can be of opening stocks or closing stocks, opening stocks or closing stocks. So you can have overvaluation of opening stock, undervaluation of opening stock, overvaluation of closing stock, or undervaluation of closing stock. So this also creates a difference in the profits as exhibited by finance and as exhibited by cost accounts. So think about it, what will happen? But before that, let me talk about the third difference. In finance, expenses are charged on actual basis. In cost accounting, the expenses are charged or overheads are charged, majorly overheads as an expense are charged on absorption basis. So we have just seen in the previous examples also, there can be under and over absorption of overheads, which will lead to a difference in profits. Now, how do you treat the differences? So if an item is there which is purely an expense in finance, it will reduce the financial profits, right? What will the income side do? It will increase the financial profits. What will an item, pure cost item of an expense will do? Reduce costing profits. If there is overvaluation of opening stock in financial books, it will reduce, I'll write here, overvaluation of opening stock will reduce financial profits and undervaluation will increase. Overvaluation of closing stock will increase the financial profits and undervaluation of closing stock will reduce the financial profits. Okay. Similarly, absorption. Under absorption and over absorption is in costing. So over absorption of overheads will reduce costing profits and under absorption will increase the costing profits. Right? So these are some of the reasons why there can be difference and what is the impact. Now, there are different ways in which you can reconcile. You can start with the cost accounting books. So how do you reconcile? Start with the cost accounting books and reach the financial profits. So you'll have to make some adjustments. Like if an item is purely financial expense, you will have to subtract. If an item is purely financial income, you will have to add. If there is over absorption in costing profits of overheads, the profits have gone down in costing, so you will add. Under absorption, the costing profits have gone down, so you will, to ensure that over absorption is there, add. Under absorption should be subtracted. The costing profits have come down, gone up because of the under absorption, so you will subtract to increase them, right? And last, how will you deal with the stocks? So overvaluation of opening stock have reduced the financial profits. So you will also reduce it. Overvaluation of opening stock, subtract. Undervaluation of opening stock, add. So why are we subtracting the financial expenses, adding the financial incomes? Wherever the financial profits have increased, we have also increased. Wherever the financial profits have decreased, we have also decreased. However, if the costing profit and loss account has gone down, we have increased. And if the costing P&L account has gone up, we have subtracted. So what is the reason? Because we are starting with cost accountant accounts and we are moving to financial. So our purpose is to go as per the financial books. So whatever finances have done, financial books have done, we will do the same. But whatever cost books have done, we will reverse that. Okay. So you start with the costing books. look at what is the impact of any item. Has the profit increased or has the profit decreased because of that treatment? Similarly, you look at the financial books and see whether the profits have increased because of this in the financial books or the profits have decreased. So let's say there are four items. Because of the A, profit in cost books have decreased, and you want to reach as profits as per financial books. So whatever costing has done, you will reverse it. If profits have increased, you will subtract. If profits have decreased, you will add. Here, if profits have increased, you will also increase. If profits have decreased, you will also decrease them. Because you have to go as per financial books. So you'll do whatever financial books have done, but you will reverse what cost books have done. So this is the fundamental rule here. Let's look at this question now. Following figures are extracted from the financial accounts of Selwell Limited for the year ended 31st December, let's say 2025. Sales is 20,000 units worth rupees 50 lakh. Materials, wages, factory overheads, administration overheads, selling overheads are given. Finished goods are given as 1230 units. Work in progress is also given, which comprises of material, labor, and overheads to the tune of 1,40,000. Goodwill is written off and interest is paid on capital. So in reconciliation, sometimes you will have financial and costing profits, cost sheet prepared, and profits for both are given. You only need to reconcile. Sometimes the profit and loss account would be given, but you need to prepare the cost accounts and then you have to reconcile. But sometimes neither the financial profits are given, neither the cost profits are cost sheet or cost accounts are laid down. First, you have to prepare them both and then reconcile. So here we don't have a cost financial P&L account. We don't have a cost records. So first we have to find out what should be the profit as per P&L account, then a profit as per costing P&L account, and then we reconcile. So in the costing records, factory overheads are charged 100% of wages, administration are charged 10% of factory cost, selling is charged at 20 rupee per unit sold. So you have to prepare a statement, reconcile the profit as per cost records with the profits as per financial records. So let's first prepare the financial profit and loss account. Sales, 50 lakhs. 20,000 units. Material, 20 lakhs. Wages, 10 lakhs. Factory overheads, 9 lakhs. Therefore, gross profit, 11 lakhs. To administration expenses, to selling expenses, to interest, to goodwill written off. Administration is 5,20,000, selling is 360. Finished goods are 3 lakh. Closing stock of finished goods, 3 lakh. And it's saying that 1230 units are there. And closing stock of WIP is also given as 1,40,000. So our calculation of gross profit has gone wrong. Goodwill 4 lakh, interest 40, 520 and 360. Your gross profit will be 50 lakhs plus 3 lakhs plus 140, 54 lakh 40,000. I don't see any closing stock of raw material, and 54 lakh 40,000 minus 39 lakhs. So it's 15 lakh 40,000 as the gross profit. From 15 lakh 40,000, when you will subtract 5 lakh 20,000 plus 3 lakh 60,000 plus 40,000 plus 4 lakhs. That totals to 13 lakh 20,000. So your net profit is 2 lakh 20,000. Let's prepare our cost sheet. Material consumed 20 lakhs. Wages 10 lakhs. Prime cost 30 lakhs. Add factory overheads. Factory overheads are charged at 100% of wages. So another 10 lakh. And this also tells us that there is a difference in factory overheads, 9 and 10. So factory overheads are over-absorbed by 1 lakh. You have 40 lakhs. This is gross works cost or factory cost. Add opening stock of WIP, which is not there. Nothing is mentioned about the opening stocks of work in progress, and nothing is mentioned about how you have to value the closing stock of work in progress. So opening stock is nil, less closing work in progress. So I'll take it as 1,40,000 only. So your net works cost or factory cost comes out to be 38 lakh 60,000. On this, you will add administration expenses or administration overheads. Administration overheads are charged at 10% the factory cost. So it becomes 3 lakh 86,000. So 38 lakh 60,000 plus 3 lakh 86,000. The total cost of production comes out to be 4 lakh 24,000, 42 lakh 46,000. There were no opening stocks, but there are closing stocks of finished goods. And 20,000 units are sold and 1230 units of finished goods are there. So for WIP, I had no option but to take the figures of closing stock as same as financial books. But in costing, I will calculate the cost per unit for 21,230 units. So cost of production of 21,230 units. When 42 lakh 46,000 is divided by 21,230 units, it gives me the cost per unit as 200 rupees. So this will go as your working note. So less closing stock of finished goods. It is 3 lakh here, but here it will be 1230 into 200. So 2,46,000 is the cost of finished goods. Therefore, cost of goods sold 40 lakhs. Add selling expenses. Selling expenses are 20 per unit sold. So 20,000 units are sold, 20,000 into 20, 4 lakh. So total cost of sales becomes 44 lakh. And sales is 50 lakhs, therefore profit is 6 lakhs. So costing profit is 6 lakh, financial profit is 2,20,000. And where are the differences? One, factory overheads were over-absorbed by 1 lakh. Administrative overheads are charged at 386, whereas administrative overheads are charged at 5,20,000. So another difference of 134. Administrative overheads are under absorbed. So this is the second difference. Third difference is closing stock of finished goods. Closing stock is finished goods is 246, whereas closing stock of finished goods is 3 lakh. So in financial books, closing stock is overvalued by 54,000. And then selling expenses are also, I think, showing some difference. Selling expenses 3,60,000 and 4 lakh. So selling expenses are also over absorbed by 40,000. So selling expenses are over absorbed by 40,000. Financial factory overheads are over absorbed by 1 lakh. Administrative overheads are under absorbed by 134. The value of finished goods is overvalued in financial books by 54,000. Opening stocks are not there. WIP is not a problem. Same. Apart from that, purely financial expenses items are these two, 440. So now let us reconcile. Statement of reconciliation of profits. We have profits as per cost books. With rupees 6 lakhs. And profits as per financial books. That's, I think, 2,20,000. Right. Now we'll make some adjustments. First, let's adjust for overabsorption and underabsorption. So, like I said, add overabsorption of overhead. Why? What is the impact? Expense more, so profits are less. Overabsorption means you book more expense, so profits are less. So factory overheads are overabsorbed and selling expenses are overabsorbed. By 1 lakh and by 40,000. Less under absorption of overheads. Administration overheads, 1,34,000. Why? Because under absorption means expense have been booked less, so profit has increased in cost books. Then you have uh, financial books. Closing stock is overvalued, so profit have gone up. So you will also add overvaluation of closing stock of finished goods. How much is that? 54,000. So we have adjusted for under and overvaluation of stocks, and we have adjusted for over and under absorption of overheads. Now we'll talk only about purely financial items or purely costing items. No item is purely costing. Material was there in finance, wages was there, factory overheads are there, closing stocks of finished goods and WIP are there. Administration overheads are also there in both the books and selling expenses. So no item of costing is which is of purely costing nature. However, uh, we have interest and goodwill. So these are financial expenses. Purely financial expenses will reduce the profits. So you will also reduce. Goodwill written off, 4 lakhs, and interest expense, 40,000. So 4,000, but you're going to subtract 5 lakh 74,000. So find out whether you get the profit or not. 6 lakh plus 1 lakh 94,000 minus 5 lakh 74. 2 lakh 20,000 is the financial profits. Now, I'll just speak about two more things here. Number one, if you forget whether it is to be added or subtracted, particularly for stocks, remember one simple line. In dictionary, if you look at the words add or less, what comes first? Add. If you will place closing stock and opening stocks in dictionary, what will come first? Closing stock. If you will put the words overvaluation and undervaluation, which will come first in dictionary? Overvaluation. So whenever in financial books there is a overvaluation in closing stock, add. Right. But This is only when you are going from costing profits to financial profit. When you are going from costing profits to financial profits, add overvaluation of closing stock. So if you are adding overvaluation of closing stock in net financial books, you will subtract the undervaluation of closing stock. If you are subtracting the undervaluation of closing stock, you will add the undervaluation of opening stock. And if you are adding the undervaluation of opening stock, you will subtract the overvaluation of closing stock, right? Just remember one, add overvaluation of closing stock. So if in financial books, closing stock is more and you're moving from costing books to financial books, you have to follow this. Now, there are methods like what if there is a loss? So if there is a loss, you whatever you add, you subtract, whatever you subtract, you less. But instead of that, if I write here minus 6 lakh, let's say it was a loss of minus 6 lakh, then it will remain same. Whatever I'm supposed to add, I'll add, and whatever I'm supposed to subtract, I'll still subtract. Okay. So instead of reversing, adding and lessing, just remember going from costing to financial, and if it is profit plus 6 lakh, if it is loss minus 6 lakh. That's it. Whatever the items I'm telling you to add, they will still be added. Whatever the items which are to be subtracted, they'll still be subtracted. And this is when you're going from costing to financial. Once again, if I say if you have to move from financial to costing, you will reverse all this. So that creates a confusion. So for that also, the best thing is if you get a such a question in exam, still go in your rough paper or rough sheet from costing to financial. And then when you are copying it from financial to costing, then you can easily reverse it. Whatever you have added, you can subtract it, and whatever you subtracted, you can add. Okay. So follow just one rule that you're moving from costing to financial. And whether it is profit or loss, if it's profit, you start with plus. If it's loss, you start with minus 6 lakhs. Okay. So this was about non-integrated, integrated, and reconciliation. We'll speak about our next topic, job costing. So in just like you have seen how the costs are to be absorbed, so you can similarly find the cost of any job. You can apply those absorption rate to the jobs. Like material for that job may be given that this is the direct material used. Labor for that job will be given that this is the direct labor used, right? Everything will be given. All you have to find is to find the cost of the job. So how will you do that? To material and labor, you will add the, let's say first factory overheads at an absorption rate. Okay? I can give you a 10 minutes break if you want, 5 to 10 minutes break if you want before we start this topic. If you have any questions regarding integrated, non-integrated, you may ask. Otherwise, you can take a 5 minutes break. Okay. We'll start job costing after that. Right? Just have a 5 minutes break. Okay, you need a break. Okay, have it. So we'll start after the 5 minutes break. Material, labor, and factory overheads can be absorbed at an absorption rate, which will be mentioned or which you may establish. Similarly, your administration overheads will be charged at an absorption rate. Similarly, selling expenses will be charged at the absorption rate. So you can find the cost of any job when you are using a job costing system. Let's look at this question. A little bit here, you will use some equation method. In an engineering company, the factory overheads are recovered on a fixed percentage basis on direct wages. So it's saying that you have to recover the factory overheads on the basis of wages. Whereas administration overheads are absorbed on a fixed percentage of factory cost. So factory overheads are as a percentage of wages and administration overheads are as a percentage of factory cost. Factory cost you will get when you will add material, labor, and factory overheads. But we don't know the factory overheads. First, you will know that, and then you will apply the administration overhead. The company has furnished the following data relating to two jobs undertaken by it in a period. So, for the both the jobs, direct materials are given, direct wages are given, the selling price of both the material jobs is given, and profit is given as a percentage of total cost. So, first we need to find out the profit here. And like I have told you, the easiest method here would be 10% on cost. So it's 1 by 10 on cost will become 1 by 11 on sales. The problem is profit is given as a percentage of cost, but we have the figure of sales. So 1 by 10 on cost is 1 by 11 on sales. 20% means 1 by 5 on cost, which is 1 by 6 on sales. So first we will find out what is the profit. 1 by 11 on sales. So 1,66,650 divide by 11. The profit comes out to be 15150 for job 101. For job 102, 128,250 divide by 6. The profit is 21,375. So once you have subtracted the profit, so factory and administration overheads are only given. That means you will find out the total cost of both the jobs. So for job 1, the total cost is 1,66,650 minus 128 to minus 15,150. So and for job 102, it is 1,28,250 minus 21,375. So job 102 will cost you 106,875, whereas job 1 is costing you 1,51,500. This is the total cost of job 101 and 102, in which we have the information on material and wages, but we don't know how much is the factory overheads and how much is the administration overheads. So you have to calculate the percentage recovery rate for factory overheads and administration overheads as first part. How much factory overheads, administration overheads, and profits is there for the two jobs? And using the same rates, we also have to fix the selling price for job 103. So first, let's calculate the recovery rates for factory overheads and overheads in general. So let's say let the factory overheads be X percentage. X percent on wages, and let the administrative overheads be Y percent on factory cost, on or off factory cost. So for job 101, you will have a equation. The total cost will be 54,000 plus 42,000 material, labor. Now you will add factory overheads, X percentage of wages. This will become your factory cost. In this, you will add administration overheads, which is Y percentage of total, 96,000 plus, if you will solve this, 420x, which we know is equal to, I should write here completely, which is equal to 1,51,500. For job 102, 37,500 plus 30,000 plus X percentage of 30,000 plus Y by 100 of the total, which is 67,500 plus here we had to write, by solving this I get 420x, and here I'll get 30,000 divided by 100, 300x, which is equal to 106,875. So when you solve the two equations, you get 96,000 plus 420x plus, if you will solve this, you will get 960y and plus 4.20xy. Here you will get 67,500 plus 300x plus 675y and plus, once again, when you will solve this, you will get 3xy. This is your equation 1 and this is your equation 2. Two variables, two equations. So if I look at 300 and 120, 120 more than, so this is 1.4 times. If you will divide 420 by 300, you will get 1.40, right? So I multiply equation 2 by 1.4. So what do you get? 67,500 into 1.4, that is 94,500 plus 420x plus 945y plus 4.20xy. Now subtract equation 3 from equation 1. your 420x and 4.20xy will get cancelled. What will remain is 96,000 plus 420x. I'm solving it here. Plus 960y plus 4.20xy is equal to 151,500 and 94,500 plus 420x plus 945y plus 4.20xy will be equal to, multiply this also with 1.4. This is equal to 151,500 and this is equal to 106,875. This is your equation 1 and this is your equation 2. So this becomes 106,875 into 1.4. This is 149,625. Okay. You could have taken this 96,000 directly here and then solved it also. That would have been easier. Now this will get cancelled and this will also get cancelled. So 1500 plus 15y is equal to 151,500 minus 149,625, 1875. So 15y is equivalent to 375 and y is equal to 375 divided by 15, 25%. So factory cost will be, administration overheads will be 25% of factory cost. Now you can solve for x also, putting the value of y as 25%. So when you will solve this equation, let's put the value of y in any one. So 96,000 I'm going to take to here. So you have 420x plus 960 into 25% into 25 plus 4.20x into 25 is equal to 151,500 minus 96,000, 55,500. And if you will multiply 420x plus 960 into 25 is 24,000. This 24,000 will also go here. 55,500 minus 24,000 plus 4.20 into 25x. So this becomes 420 plus 105. 525x is equal to 31,500 and 31,500 divided by 525 will give you x is 60%. So x is 60%, x is equal to 60. So you have 60% on wages and 25% on factory cost. Now let's prepare the second part, amount of factory overheads, administration and profit for each of the two jobs. So this you can prepare here itself. 54,000 plus 42,000 is 96,000. Then 60% of this will be 60% on wages. 42,000 into 60% is 25,200. Factory cost comes out to be 1,21,200. Administration overheads are 25%. This becomes 30,300 and the total cost becomes 151,500. Sales is 1,66,650. So the profit is 15,150. So second part is also done for job 101. Similarly, you can do for job 102. In third part, it is asking you to find out the selling price for job 103. So direct material, 24,000. Direct labor, 20,000. Your prime cost will become 44,000. Factory overheads, 60% of wages, 12,000. 56,000 becomes your total cost, factory cost. Add administration overheads at the rate of 25% of factory cost, 14,000. So total cost becomes 70,000. Now profit is given on sales, 12 and 1.5%, but we have the cost. So 12 1 by 2 is equal to 1 by 8. So profit, which is 1 by 8 on sales, is equal to 1 by 7 on cost. So 1 by 7 of 70,000, 10,000. Therefore, the selling price to be fixed for job 103 should be rupees 80,000. Okay. This is the concept of job costing. Right? Next, we have batch costing. Batch costing, if you remember materials where we are done EOQ, it is similar to the same concept, but here we follow economic batch quantity, EBQ. So if I take the same question with rather than buying 24,000 bearings, if I have to produce 24,000 bearings and I have to put them in a production process where the bearings are processed in batches or produced in batches. So what should be the batch size? That is what I'll calculate in batch costing, economic batch costing. So X Limited is committed to supply 24,000 bearings per annum to Y Limited on a steady basis. And it will take 10 paisa per inventory holding cost per bearing per month. So here again, this given by the same formula under root 2 into U into P, where is production setup cost, and divide by S, the holding cost. So 24,000 bearings is something you need per annum, and cost of setup per run is 324. Divide by storage cost. It's 10 paisa per as inventory holding cost per bearing per month. So 10 paisa per month. In 12 months, it becomes 1.20 per annum. So what should be first part? What would be the optimum run size for the bearing manufacturer? 2 into 24,000 multiplied by 324 divide by 1.20 under root. So you will prepare process 3,600 units per batch or 3,600 bearings. Assuming if you manufacture 6,000 bearings per run, how much extra cost the company would be incurring as compared to the optimum run? So once again, we can prepare a tabular form. So if bearings per run are 6,000, number of runs will be 24,000, the quantity you need, usage divided by quantity you are producing. 24,000 divided by 6,000, you will have 4 runs. Total setup cost, 324 per run. So 324 into 4, it is 1,296. What will be the holding cost? So if you are having Q units, on an average, you will hold half multiplied by the storage cost of each unit per annum. So 6,000 divided by 2, 3,000 units will be held at the rate of 1.20. 3,000 into 1.20, 3,600. And what will be your total cost then? 3,600 plus 1,296, 4,896. Had you gone for 3,600 units, number of runs would have been 24,000 divided by 3,600, 6.67. Theoretically not possible. Practically not possible to have a production run of 6.67, so you will have 7 runs. But here, for theoretical purpose, to compare the price, I can take it theoretically. So it will cost me 2,160, and I will be holding 1,800 units, 3,600 divided by 2 at the rate of 1.20. So my total cost will be 2,160, and 2,160 plus 2,160, it will cost me 4,320. So what extra cost you will incur? It is 576 rupees. If you compare 4,896 with 4,320. The total cost at EOQ can also be, or EBQ can also be calculated using this formula. Instead of dividing by S, you multiply it here on itself. So you get 2 into 24,000 into 324 into 1.2. And you can take the root of this. So 2 into 24,000 into 324 into 1.2, and the square root of that is 4,320. And when you have calculated the total cost, total relevant cost using this formula, you can divide it into 2 to find out what will be the setup cost and what will be the holding cost. Even if I had not rounded off, let me take, I go by 7 runs, 6 runs of 3,600 units and the balance in the 7th run. So then my setup cost will increase by slight amount, 7 into 324, 300, 7 into 324, it will be 2,268. However, I'll assume that I'm holding on an average 1,800, so this will remain 2,160. And then my total cost would be 2,268 plus 2,160, which is 4,428. So still, if I go for 6,000 bearings, I will be incurring an extra cost of 468 rupees. So even if you round off the number of runs, which is practically making sense, then also there is an extra cost of 468 if you go for 6,000 bearings. And what is the minimum inventory holding cost? Minimum inventory holding cost is this. Only the holding cost, 2,160. Right? So it is the same thing as EBQ and EOQ. Apart from this, you can create a tabular method to find out what batch size is best for making the product. Last topic today is unit costing. When we talk about unit costing, how do you calculate the cost per unit? So it is quite simple. Like we have prepared the cost sheet earlier. For example, here is a cost sheet. And how many units you are manufacturing? 1200, 21,230. So if I prepare a cost per unit column here itself, what will be the raw material cost per unit? So I keep on dividing all the cost with the number of units. So I'll have 20 lakh divided by 21,230. So it's costing me 94.21 for the material. For wages, it will cost me exactly half, 47.103, or I can take it as 10. So my prime cost will be 141.31 rupees. Then I add another factory overheads, 47.10. And my gross factory cost comes out to be 188.41, from where I'll subtract the closing WIP. So I would rather take 38 lakh 60,000. I'll ignore this and I'll divide 38 lakh 60,000 straight away with 21230. So it comes out to be 181.81. So I'll take it as 82. Then to this I'll add the administration expenses, 3,86,000 divided by 21230, another 18.18. So when I add 18.18 to 181.82, it comes out to be 200. So when you subtract the closing stock, which is again at the rate of 200 per unit, so cost of goods sold will be 40 lakh divided by 20,000. That will be also 200 per unit. Then you had the selling expenses, 20 rupee per unit. So your total cost of sales per unit becomes 220, and you are selling it for 5 lakhs. So that means you are selling it for 250. So you are getting a profit of 30 rupee per unit. So when you prepare a cost sheet and you prepare a simultaneous column of cost per unit, that becomes your unit costing. When you look at unit costing, there can be many industries, like for example, brick industry. So you want to find out the cost per brick. Now the cost per brick will be very less. So you change the unit to cost per 1 lakh brick. Similarly, when you are making power, cost per kilowatt of power produced. If you are making, let's say, running a hotel, what is the cost per room? If you are running a restaurant, what's the cost per meal? So whatever the unit you take, you calculate the cost per unit. Let's take this. Following data relates to the manufacture of a standard product. So here cost sheet will look something like this. You will always have a column of the total cost and you will have the column of a per unit cost. And apart from that, whatever we have learned in the cost sheet chapter, more or less same concepts will be applicable here. So your raw material consumed is 4 lakh. and units produced and sold are 10,000. So you'll divide this by 10,000. So cost per unit of raw material is 40. Then you add direct wages, 2,40,000. So your cost of wages comes out to be 24. Prime cost, 6,40,000 or 64 per unit. Add factory overheads. So it's saying 3,200 hours are worked and 40 rupee is the machine hour rate. So it will come out to be 1,28,000 divided by 10,000, 12.80. Factory cost comes out to be 7,68,000, 76.80 per unit. Then you add office overheads, 10% of works cost. So 76,800, 7.68 total cost of production. This is 8,44,800 total, and per unit is 84.48. Then you add selling expenses, which is given at the rate of 20. So you'll multiply with 20 into 10,000, 2 lakhs. Okay. So your total cost of sales comes out to be 104.48, or total is 10,44,800. Now they are sold at 120 each. So if they are sold at 120, your profit will be 15.52. 120 into 10,000, 12 lakhs. And 12 lakhs, when 1044 is subtracted from this, you get 1,55,200. So this is your per unit also and in total also. That is how you prepare a cost sheet. Okay. So this was the topic. If you have any specific question, I'll take that up. Otherwise, we are good to go for the day. Thank you so much. I hope the session was fruitful and you have revised all the concepts properly. Any doubt or any question? Yes? All right, then. Thank you so much. Have a good day, all of you. And all the best, because this is my last session with you in the revision. I hope you will all clear with beautiful and wonderful marks. Thank you so much. Bye. Thank you, Shwetji. You can go. Yes, yes, we can close. Thank you.